So, hello everybody. Welcome to the third installation of our Abraxas podcast. John, how is life? How are you?
I'm a little bit tired, but I'm ready for a good podcast today morning. Everything is
Dave,
good.
you are high energy. How are you?
Um, Good and sad at the same time.
Why is that?
Because 90% of my flat moved out yesterday, and right now I'm
Hmm.
shitting my pants alone in a huge ass apartment here in Lisbon. So, um, still need to figure out.
You can throw a house party, so that's that.
Yeah, you can
Yeah,
invite. We only have to pay for the airplane, and
we
we have
can
a
we can have an Abraxas house party with all
Real life
new.
Abraxas podcast.
hybrid.
It's gonna be like an audience meeting, you know. It's when we meet our audience, like each other.
I mean, we can invite some, friends and family, and then it's not just the three of us, and then, sell it to make it look like Photoshop additional people in the picture and stuff. That would be super
Yeah.
nice.
Yeah, it's true. My mom is always excited. She's sending the links, like the URLs, to the family group when we upload some video, like telling everyone, like, see, they have like new video coming out. Thanks, mom. Thanks for the support. Yeah.
It's a good thing when your mom is your biggest fan. I think that's very wholesome, and I really like that idea in general. But
Yeah.
let's move on to today's topic. Today we want to talk about multinational corporations and multinational entities. This might sound like a bit of a dry topic at first. However, we really want to focus on the real life implications, or to look at actual examples. Since when we were in Lisbon, and by the way, the Lisbon blog is already live, so come and check it out. We were actually talking about real estate agencies and how a real estate agency can go international, and that sparked the whole debate around what an international company is, how do they operate exactly, because for example we see giants like Google, Facebook and Apple everywhere, but we don't really know how they work, what are the advantages, what are the disadvantages and stuff like that. So this is something that we want to uncover in a bit more detail today. First, let's start with the basic, to get it out of the system. What is a definition of a multinational corporation? Multinational corporation is a company that has business operations in at least one other country than its home country. By some definition, it also has to generate 25% of its revenue outside of its home country. So we can see that the definition is very vague. When we talk about those big multinational corporations, we don't necessarily, by definition, talk about giants like Amazon and the ones I have mentioned already before. But even a company operating in two or three countries can already be a multinational corporation. There are many advantages and disadvantages to them. Let's start with the advantages first. I think one is very apparent is that they open up new markets and they bring their products everywhere, and they really generate a lot of sales opportunities, and they can do it at a cheaper price with economies of scale, since they can just bring one big plant and then supply cars, for example, everywhere. Tesla is a good example of that, right?
Huh?
Yeah.
So I'm dying in the meantime. What?
No, I mean, just for
You
example, economies of scale, right? That Tesla, for example, has like a gigafactory in Nevada, right? And that's how they supply cars to the whole world. And this is one advantage, that for that cars can become a lot cheaper, instead, if on the other hand they would have to build like 10 small factories.
Yes. I'm having difficulties to add any ideas to that, but yeah.
No, I mean, it's like really about cost optimization, and this is, what I want to put on the discussion, that you can build products much cheaper, and then we can see many example of that. Like, for example, as
But
I cars, as I said already, like transistors.
yeah, but for Tesla, if I'm not mistaken, they do it not just because of like the cost reduction comes from several approaches, like aspects. Because one of them is that the labor force is, I believe, it's lower than if they were producing basically in any other state in the U.S. And the other factor is that now, like Texas itself is getting more and more of like a technological hub because of their tax reductions. So a lot of like HQs and manufacturing entities are moving there.
Yeah, of course. I mean, Texas has many benefits, like its sheer size and economical power is also very important. But that's Texas is a good location for a global company, to set up one single factory. But because of this multinational being, is that they don't have to set up a factory in each state, or what makes more sense, like in Europe, in each country, right? So they don't, for example, if you look at Volkswagen, which is a European company, they don't have to set up just a factory in Germany, a factory in France, a factory in Spain, but because economies of scale, they can just set up one big factory, like in Slovakia, for example, and then supply the whole of Europe with that. This is one economies of scale that can make cars cheaper, which is really beneficial for the consumer in the end.
But usually what they do is they have like several manufacturing units in like different countries, right? Because for example, for Mercedes, we have one in Kecskemét, but then they only create the base models.
Yeah, I mean, it also makes a lot of sense, right? To not rely too much on one single plant or on one single country in general, because then it's a lot of risks. I think Apple faced the same issue with China recently. That Apple had most of its production in China. iPhone, iPad, the AirPods Max, every kind of product they sold, they manufactured most of it in China. And since China went in lockdown, obviously, they had protests, the factories weren't working. So Apple faced a big strain on its supply chain. And it's really important to diversify your portfolio and not just put everything that's manufacturing in one place, because, if a virus happens and everything has to be closed, then then your whole operation is at risk. And I think it makes sense, to have obviously 3 or 4 factories scattered across the world or across Europe, for example. But that's still like a big advantage, that you don't have to build individual factories by country, only by region, right? Because you also have to focus on shipping costs. Since like, even if they have a gigafactory, going back to the Tesla example, a gigafactory in Texas, shipping them to Asia or shipping them to Europe would make it super expensive. And this is also something that transfer of resources. This is how we move on to another point, that a cheaper, a less developed country can really benefit from multinational companies, since they bring a lot of FDI, foreign direct investment, to that said country. So let's
Oh,
say that
the jiggy shit, the three syllable abbreviations, bro, coming up everywhere.
there's this is today's 3 syllable abbreviation: FDI, foreign direct investment.
Foreign direct investment. Okay, what is
And
that?
that is beneficial for a certain country, and also for a company, of course. What FDI is, for example, I'm moving capital to a certain country to build something there, which will ultimately benefit my operation, right? So, for example, when BMW is building a new car factory in Debrecen, one of the Hungarian cities, that's a foreign direct investment, since BMW is bringing a lot of financial resources to Hungary to build the new factory, to build parts and cars, of course, and that really stimulates the Hungarian economy, or like the given economy of the country, in this case ours, because then our people will have somewhere to work. We can build their factory, and that also generates income and jobs in general. So multinational companies moving and expanding across the globe really gives you the option for smaller, less developed countries to catch up at least a tiny bit faster, if that makes sense. So, for example, I think one very good example of this is that Hungary is very big on car companies, by the way, if you haven't noticed already. Audi, it's also a big German car maker. I think probably everybody knows Audi, and they have a factory in Győr. That's west of Hungary, very close to the Austrian border, and they have car manufacturing, engine manufacturing, and research and development here in our country as well. And every year you look at the GDP data of Hungary, and I think Audi is responsible for a significant percentage of that. I think I would say that the Audi factory alone makes up 2 to 4% of the Hungarian GDP. I think somewhere around that, which is a very significant amount if you think about it. Like that's huge, and that really helps the economy of a less developed country to grow and be stronger.
Hmm.
John, we haven't disclosed this in the beginning, but you are not really an economist. I think Dave and I, we have degrees in this respectable field. You are on a different route. Is this clear to you? Do you have any specific question? What would you like to add anything by any chance?
Yeah, I think I understand what you're saying. Uh, my question is, what do you think about uh, is that form like a multinational company is good, or is there a better form to a company? So you said a lot of positive things about them, but is there any negative things about multinational companies?
I mean, there are a lot of negative things as well. I think it really depends on the perspective you are looking at it from. Because if you are a company owner and then you want to earn even more money, then multinational company is the best way to do that. It doesn't get any better than this. You can operate across the whole world. Multinational company, we are not talking about that because it's really nitty gritty details, but there are many different forms of how do you set up your internal organizational structure? Do you create subsidiaries? Do you manage everything under one roof, etc., etc.? But I think the disadvantages in general can be boiled down to tax avoidance. I think that's a really big issue
But
because
if a company is not multinational, just a simple company in one country, that company also can avoid tax, right? So I don't
no,
understand why a multinational company is better in tax avoiding.
that's because if you are operating in one country, let's say Portugal, you have a fixed tax you have to pay as a company. It's usually 15%. And you can try to avoid that by simply doing something in an illegal way and not paying that set
Yeah,
tax.
and a small company can do that easily. So a multinational company can't say that, oh, we don't need a contract because we can just talk it. But a small company can do this and they can avoid tax.
Yeah,
Tax.
yeah, but there are certain things. For example, there are countries that are super super poor, and or like not poor but not very attractive to investors. That's the right way of saying it, right? And the way they attract foreign companies by making zero tax on them whatsoever. Like you come here, you say how much you have earned, we will not tax you at all. And for example, that's what Ireland have done for a long time. There is also a phenomenon called Ireland double sandwich. That this is definitely. Do you know, Dave? What's the right name exactly? There was a double thing for Ireland, and they had like a fancy name for that. This was what Facebook did as well. Double sandwich, double ice cream.
Oh shit! Yeah, I know you what you mean.
Anyway, the point is that Facebook didn't have to pay any taxes in Ireland at all officially, right? So Facebook just moved their European headquarters into Ireland, and then they paid basically no company taxes in Europe whatsoever, completely legally, right? With no risk of anybody ever coming after them, since in Ireland that was completely legal. But if you're a small company and you are trying to avoid tax, the state authority can still find you and still fine you for a big amount. But Facebook did this whole thing completely legally and pay almost no corporate tax whatsoever for more than 10 years.
And are they are the Europeans trying to change that? Because uh, if you do something in Hungary, you should pay tax in Hungary. So if there are people who use Facebook in Hungary, they should pay tax for those people to Hungary, right? So is there a possibility that, for example, Hungary can ask tax from Facebook?
Yes. One quick question. I found the name. It was double Irish with a Dutch sandwich. It was so popular that it actually got a made up name. Uh, is a tax avoidance. I'm going to read off of Investopedia right now. Double Irish with a Dutch sandwich is a tax avoidance technique. They set up Irish and Dutch subsidiaries, so smaller corporation,
You just
and
freeze.
they shift all the profits from those Dutch companies to Irish border, and then they pay no tax at all. By the way, going back to your question, Europe has very specific rules for that. They want to implement a global minimum tax for companies in Europe. So everybody has to pay at least 15% of tax. USA and many other countries are also on board with it. Unfortunately, Hungary isn't, because this is one advantage that we are taking. This is one thing we are taking advantage of. That we are. This is how we are also attracting companies, that we also have a lower than average company tax. But they plan to introduce a global minimum 15% tax on every company.
Hmm.
But there are many things like that. For example, in the Cayman Islands, it's also very cheap to have your company there, and people just put register companies in the Cayman Islands, and there are houses like a normal like single family home with 15,000 mailboxes, and it's obviously fake and scam, and people only do it to avoid taxes. And this is the thing that a government cannot legally do anything against it since it's technically legal. And that's the difference between what you said, a small company simply lying on their tax sheet.
Mhm.
Now, that's just one thing. I think what is also super important is monopolies in general. That that a global company can really, a big multinational company can really dominate the market and drive up prices, enter a new market already, and then having a big financial advantage, and just make every incumbent player like go broke by taking over with lower prices, because they can finance their loss from different sources of income or from different markets. So it's often a problem that big companies turn into monopolies. I think Microsoft is a perfect example for that, because if you look at it on the computer operating system stage, or like on that market, more than 90% of the laptops are Windows and desktop computers as well, right? So everybody runs Windows. They can basically do whatever they want. They can charge almost as much as they want, and also they don't have to innovate as well. So I think this is pretty well researched already, that competition breeds more innovation. But if somebody is a monopoly like Microsoft, they can just chill, earn a lot of money, and then simply put up less developed, less good products for the consumer. I think something that is really important is that environmental impact and social displacement, to also talk about that a bit, because it's kind of the same with tax avoidance, right? If you're already a global company, you can set up factories and manufacturing plants everywhere. And then if the EU has, let's say, EU in general have super strict environmental laws, and also, for example, working condition laws, that how much you have to pay somebody, how many sick days or vacation days can they get, which is obviously good for the individual employee, but bad for the company. Bad, I mean less profit, right? And since they can set up shop anywhere, they just set up, I don't know, a shared service center, like, a call center or something in India or in Africa, where they don't have to focus that much on regulations, and they can do a lot of environmental damage, which they would unable to do in their home country. So that is also a problem. Furthermore, offshoring, they really, it's also a symptom of this, that they really move to the cheapest labor possible, and that's why, for example, in their home country they often don't provide jobs at all, which making the working class in that specific country not very happy. So I think there are a lot of positives and negatives. I think it's really making certain products more accessible, but there are a lot of like social and environmental issues that arise from corporations that have a bigger yearly income than some governments, right? Facebook probably makes more money in a year than Portugal and Hungary combined, and they really have more influence than some government. And obviously, a government is elected for the people, but a private company really only works in their self-interest. So I'm not sure, what do you guys think in general, based on what we have discussed so far? Are multinational companies a good thing, bad thing? How would you improve it, or what are your thoughts on it?
So I have a question. For example, Microsoft, it's an American company. The owners are Americans, but as you said, they trying to avoid, I guess, the tax there. They pay other countries people cheaper people than Americans. But if the USA government would say that we have to stop them and we have to weaken Microsoft, I'm not sure if that would be good for the USA at the end, because a weaker company couldn't expand to other countries, and in the end, the owners are Americans, so I guess they are spend a lot of money in the USA at the end, right? I don't know if you understand what I'm trying to say.
I think I understand what you're saying, but the owners are American, and that's a completely correct sentence. But the majority shareholders are very few people. And then, let's say that, for example, Bill Gates was the most richest person in the world for a very long time, right? And I think you could argue that by diminishing the wealth of Bill Gates, so that, he would earn 10% less money, right, is a smaller hit to the country than, for example, relocating two software development branches back to the US, and I don't know, 5 to 10,000 people earning more, better, or higher wages, and as a consequence, having a better life, paying more taxes, contributing to the community more. So I think 10,000 people earning, let's say, 20, 30% more, it's a lot more impactful for a certain country that one super billionaire
Hmm.
earning a few percent less.
Okay, I understand.
And yeah, obviously prices would get more expensive, and to some extent, the competitiveness of Microsoft would be diminished without a question. That's a valid point, and that's what people often bring up. But as a consequence, often the quality of the product also increases, right? That let's say that you move back to the call center to your own country, and then obviously you will pay more because people in America are a lot more expensive, workforce is a lot more expensive than in India. But instead people can deal with somebody that is a lot more familiar to them. So there are of course trade-offs, and there are pros and cons of every decision. But I think if you look at it a global from a perspective of a society, it makes more sense to keep some of the things in house, obviously, or like in the country. It doesn't make sense to bring everything there, but I think there's a good debate to on source or nearshoring, and onshoring is a concept that bring everything closer to the origin of the product, and that can also improve a lot of things. For example, the fragile supply chain that have been hit by COVID and such, you also eliminate the risk of that a lot more. So that is one pro we have seen. Dave, any thoughts on what we have discussed so far?
Not right now. I would maybe add a couple of thoughts to the whole multinational questions with regarding like certain companies. And what our idea was that we're gonna showcase the companies in Portugal as well as in Hungary. And as far as I was concerned, I was focusing quite solely on one company, which had a lot of news around it, which like these news and all these recent things coming up with the company, they are like quite related to the the fact that it's operating in a multinational environment and not like in a local smaller market. So the company that I'm talking about is it's Farfetch. It's Farfetch. It's originally Portuguese, founded but operating in more than 190 countries. E-commerce giant. It's like a luxury marketplace where if people don't know, then it's like basically a huge ass e-commerce platform where you can buy all kinds of clothes. That was like the main
But like
idea that
Gucci, and I don't know, like Ralph
yeah,
Lauren and
so
the most popular brands.
yeah, like all the high end stuff, not just the mainstream brands, but also like even higher. If you go, you're gonna see like not well known, but even more expensive brands, for example. And and yeah, so they started out with that, but then they had like a um, good head start, and they were growing really quickly, and they even had a great IPO actually. Um,
What is IPO?
IPO is initial public offering. It means that it's like basically the at the moment when a company is able to go public, and instead of become like staying as a privately um, traded company, they become like a publicly traded one. So basically, um, your stocks can be traded on the stock market from that point. And when they had this IPO, they met with like high investor expectations. So they had like a huge valuation. I think it was more than $2 billion. Um, and This is, for example, one of the first things that like came into my mind, which can be like a leading factor as a for multinational companies to be more risky to operate in this kind of um, uh, strategy or like environment, because it's like when you're going public, you're gonna face like um, you're out on the market basically. Like everyone is looking at you. Everyone can look what you are doing, how you operate, how you make your decisions, and then this is like just like how it was in high school class when like someone kissed with the other person, then they start to chatter about it and the rumors coming up, and then like the person next to you is going to tell the story in like a bit differently, and then the whole thing is like in 3 days, then you just they came up with like some absolutely nonsense shit which never happened, but then they just so these things can more easily go viral that if something goes to the south. And I think it's like a lot of pressure for a company to operate in a public environment, because then it's not it's not local anymore. You can't just do in your own way. You really need to think globally. And as we can see, it was one of the factors that led to Farfetch's downgrades, because the company right now, the shares are plummeted over 97% since its market value. And um, they're now um, they now it's 220 million, and they were at 24 billion actually. So
That's a lot. Wait,
yeah. So and also the credit rating for them was downgraded to a CAA2, and this is basically like the junk theory. And it was also because so these are like all these like domino effects. When one occurs, then they all like all the others are coming next to it, because then the investors start to feel risky. But if more and more investors are letting the company go, then key stakeholders can just quit the company and go work else, because they don't want the name to be next to a company which is um, going nearly bankrupt. So and this really is the case for Farfetch, because for example they had almost signed a deal with Richmond, which is Richmond Mansions. I think that's the full name. It's like a Swiss, it's also Swiss like luxury giants, like a multinational holding company. They own like huge luxury brands, and they were about um, to sell Net-a-Porter to Farfetch in the exchange of like 47.5% of their shares. And it would have been like the goal of both companies that Farfetch could what you already mentioned, that Farfetch wanted to like uh, expand their markets, and they could have done it with an acquisition like this. And for Richmond, it would be they have this like mission to create an this kind of like what is it called, the e retail platform solutions, which is basically that they power big websites and e-commerce platforms with their solutions, and they would have buy the like get access to the knowledge hub from Farfetch with this acquisition. But then the whole thing was like called off like 5 days ago, um, because of all these bad news coming up with Farfetch. And yeah, so as you move towards like a more multinational way of working, you really need to like juggle more and more balls in the air, and you can't just like focus on one market, for example. Because the other thing was for them the COVID, like the whole pandemic, which ranked up the sales, and then they really could benefit from those times. But then and like then obviously like investors started to um, to pay more and more attention to the company. But as the whole situation normalized, right now they're facing like huge um, decreases in revenues, and it's not just for them, but it's also for the whole luxury market right now, which is going quite down because people are not spending as much as they used to. So it's more like a global phenomenon, but still it's harmful for Farfetch. So
Yeah, I mean, just really to quickly jump in, is one thing that being multinational for a company, it obviously adds a lot more complexity compared to operating just in a single market, right? That if I operate in Portugal, I know the Portuguese people, that I am Portuguese, and I know everything around me. But going multinational really adds a lot more complexity, dealing with foreign investors and the rumors, as you said. While you were talking, I took a quick look at the Yahoo Finance, and at one point the stock, one Farfetch stock, was at $70 almost. 69.5, if I'm looking at it correctly, and right now it's less than $1. So that's really a significant loss in valuation, as you said. But just to cut it short, so you say that the fall of Farfetch, if we can call it that, like that, it comes from the global rumors, or the bad handling of the pandemic situation. So how would you sum it up quickly? Not quickly, but in short, that what was the reason, and how does it connect to what we talked about previously?
I mean, it's just usually with these kind of things you cannot like summarize with like one main issue, but it's like the appearance of several factors at the same time and dragging down the whole operation like really quickly. So um, if one thing goes south and you're not handling that situation properly, then the other thing's going to come up, and then it's just like a domino effect, and it's the spiral goes down, and
So it's bad management then.
um, yeah, that's basically it's also that must be addressed, that it was one of the issues that they are facing. And right now they are probably gonna go private, leaving the whole IPO dream behind. So
But
maybe
they
it's
will
gonna
still
be.
they will stay multinational in the end, right? They are still planning to operate worldwide.
Yeah, yeah. I mean, these concepts, these are different concepts, right? So they're not the same. Just because you're a multinational, you don't need to be a publicly traded company. I mean, I feel like there's like a correlation between those two, but it's more about the fact that
Usually they are, right? Yeah.
yeah.
Because if you go public, that's also a good way to draw in more capital. And to go multinational, you need a lot of capital. So it's a good way to raise additional funds for that operation. But yeah, of course, not every company is publicly traded. I think Porsche, obviously a big company, it was private for a very long time. And Aston Martin has only gone public in the past few years, if we stay on the automotive line of giving examples. Yet they are
Hmm.
well-known brands operating with multiple factories, etc., etc., across the world.
Yeah, I mean, yeah. If you think about it, it's like, um, it's just like, I mean, we wouldn't say just like, but it's also in the individual level when someone is getting more and more exposure and getting more and more, like, like if one individual's audience is getting more and more attention from people, then you just feel that okay, you might need to um, pay more attention what you say, how you say it, and things like that. And it's pretty much the same for companies themselves because. Um, as rumors went out, they really struggled in the recent days to find like new investors because of all these like um, debt repayment issues because they have or more than a $1 billion in debts just because of trying to grow more and more quickly, and then the whole thing can come apart and like fall down as then they like these things like investors realize that they are in this huge kind of debt and they realize that they don't really have the solvency to pay it back or like it's getting more and more risky in the environment that they are facing right now, and then this huge like stakeholder called Richmond is he's pulling the plug, and also there's Alibaba Group President J. Michael Evans, if I'm not mistaken. He was also an advisor, or he had like a huge position, like a C-level position in the company, and he also quit. So now the whole thing is coming apart, and I think it's really an issue of like huge corporations that they have this that like this the coin has two sides. Like once you reach this level, you need to pay more attention, and if you can't handle it properly, then you're gonna go back.
Yeah, it's
And
a
who
really good
knows?
example of how it adds more complexity to a company, because then if you are a head of, or like not the head, but in the leaders, or you are a leader of that set company, every action you do heavily influences the stock price. I think that guy you mentioned quitting is a good example. I think Elon Musk tweets influencing Tesla stock is also well known example. But there was this bad and beyond craze a few months ago, and then one of our mutual friends also invested a smaller amount in that company. And then, really, unfortunately, this is a sad story to a lot of extent. The chief financial officer of that company, so the leading finance guy, jumped out of a window. That really didn't help the evaluation of that stock if the most finance guy ends his life. So it was really a lot of risk, a lot of stress for the management as well. So there are really even like steering and directing a multinational company. That's also a super stressful exercise, and really a big challenge in general. And as we have seen from Dave's previous example, not every company can manage it.
Yeah, it's a
I
nice
think as
dream, but it's not for everyone.
Yeah, indeed. I think it's time we move on to the probably a little small segment. Is that we have talked about many different companies, like car companies, these global apparel companies. But I think what is a bit less usual, or what I would say it was a bit questionable for me, that real estate agencies are also international, with a notable example of Remax. It was founded in very early on in the previous century, and they have been expanding and growing since then. Uh, they launched in '94 the National Association to expand even further. They are providing specialized education to all their agents, so they are really pushed the envelope in a lot of way. But what we were arguing about originally, that the real estate market is very specific, right? That just because I'm a good real estate agent in Ohio, that doesn't mean that I know the landscape in Southeast Asia or something. And that really, I think, limits the option for going international. Because on the other hand, if you are an oil company like Shell, everybody's using the same fuel. It's really easy to go international. And this is what we had a lot of interesting debate about. John, as a seasoned real estate agent, what's your opinion about this?
I just checked Remax. I don't know uh, the Hungarian website because I haven't heard much about them in Hungary, and in Hungary they are really small. I checked, for example, in the 6 districts, they have only six real estate for sale, so they are
Well,
not.
what is the sixth district? Not everybody knows
Yeah,
Budapest as well as you do. So,
so
so let's start from the beginning.
it's a district in Budapest in the inner city. So uh,
Very crowded and popular district, I imagine.
yeah, this is the reason why I checked the sixth, because if they have this small proportion in the sixth district, the company is not important in Hungary. So yeah,
But it's here nevertheless. So that doesn't necessarily have to be super big, but it still, exists. And it exists here. We have seen it in Portugal. We know for a fact they are also in Austria, and they are also originally a American company, right?
yeah. Uh, I don't know how big they are. So I'm not in. I know about the Hungarian market. In Hungary, are uh, there aren't any big multinational companies in real estate. I mean, maybe Duna House, but I wouldn't say Duna House is a big multinational company. Uh, they uh, they operate, for example, in Poland, but as I know, they operate with a different name because they bought some real estate companies there. But I wouldn't say that's multinational company.
I mean, as we have discussed with the definition in the beginning, is they operate in more than one countries and 25% of their revenue comes from somewhere else, that's already considered as an international company. So I'm not sure that how big their Polish operation is, but if it's more than 25% of their annual income, then they technically can be considered an international company.
Okay, I'm not sure too, but
No, I mean, it's not necessarily about the size. Don't get me wrong. I'm just interested that, in your opinion, how can a real estate company go abroad, and what advantages would it have to an already incumbent player on that market? So let's say that I'm a real estate agent in a new country. Let's say, I don't know, France, and no foreign companies have been here before. What can they offer that can make them viable as a market alternative?
so I think not too much because I think the
Fair
main
enough.
product, when we're talking about real estate companies, the main product is the realtors themselves, the persons, and uh, what the company can give is mostly the name. If the name is famous, it's more easy to make a contract with the owners. It's people can trust you because of the company name. So there are several benefits, but I think not that much because the main thing is the realtor itself. The knowledge of the realtor, the attitude of the realtor, and multinational companies, as you said, exploiting people. So if the main product is the people, I don't think that's a good form for a multinational company.
I mean, it makes sense what you're saying, because I have also done some research myself, and what seems to be the key here is really the global brand recognition. if people moving abroad, they already know this company, right? So they can, trust their services, and it gives the brand a good name, and, they can gain trust with the end customer. Also, simply it mitigates risk, that even if something terrible happens in one real estate market, and it completely dies down because investment stops or people move away or for whatever reason, then you really have other areas to focus on. So it's really as a good as a risk mitigation. And also just the way I understood it, what Remax did, what made them specifically unique, is that they provided a really high level of education and training for the sales agents and the realtors, as you said. And I think one can be something that can be really a unique selling point, a USP, is that I they operate in a franchise business model. That's also important to know. So they lease the name, and then the realtors pay a fee for that. It's like, hey, if you start your Remax or Remax business in that set country, we get, I'm going to say a random number, I don't know the details, 10% of your income or 20%. But on the other hand, we will provide you with detailed training. We provide you, for example, with foreign customers. We really help you get connected to this whole world. And that can really be an incentive for people to start working under the Remax brand instead of founding their own real estate company and starting everything from scratch.
Yeah, it has advantages, of course, but I think not too much. So, yeah, in real estate, I think not the multinational company is the good form or structure.
Yeah, I mean, I agree. And I think it's a really interesting thought in general that, for example, tech companies, they only make sense if they are big, if they are huge, because development costs are insane. And, it's easier if everybody uses the same platform. That's why we have one social media company that controls Facebook, most of the social media. That's why we have only a few big computer companies like Apple, Microsoft, and Google. But for example, this real estate thing, it stayed very local over the years, right? Because the goods themselves are immovable. They are not very easily, you cannot transfer a house, right? So those markets stayed fragmented. Let's use that word.
Yeah.
Dave, any closing thoughts? I think we are ending this episode slowly.
Yeah, I think it was interesting to look at it. Um, yeah, it's like with all these I feel like regarding if a multinational company is good or not, it's cannot be stated just that with that simple sentence. You need to um, count in like several factors to decide if it's the right idea for one company or for another.
John, any closing thoughts you have?
I'm interested, John. What was like? Did you learn new things, or like did you? What was your feelings about
Yeah.
hearing about these things, or like?
It was interesting. Yeah, I learned new things about how multinational companies work. So, yeah, for me, it was interesting. And I learned a lot of things from George as he explained how these companies works. So, yeah.
Okay, I
Nice.
think I think it was we really in this episode we tried something we haven't done before. Obviously, it's our third episode, but this was a more financial focused topic. So I'm interested in what do you guys as the audience thinks about it, and it's Christmas coming up, so I'm wishing everybody Merry Christmas, Happy Holidays, Happy Hanukkah, Happy whatever you celebrate. I hope everybody has a good time in whatever left from this year, and see you guys next week.
See you
See
guys
you.
next week.
Bye.
Bye.
Öreg John az ki is lépett. Neki ez ennyi vége az adás. Nem maradok itt beszélgetni, az egy hustle